Welcome to Texas's Unclaimed Property Reporting Instructions for Financial Institutions. Nearly every financial institution has the potential to generate unclaimed property. So, in addition to managing and protecting customers' assets, as a Texas financial institution, you must comply with the state's unclaimed property laws. This video will guide you through the process of evaluating your procedures and practices regarding dormant accounts and unclaimed property reporting in Texas. What is unclaimed property? Unclaimed property is any financial asset or tangible property abandoned by the owner for periods ranging from 1 to 15 years. Bank accounts, IRAs, certificates of deposit, cashier's checks, money orders, and safe deposit box contents are typical examples of unclaimed property from financial institutions. Most unclaimed tangible property reported to the state comes from financial institutions. The first step of reporting is determining dormancy. An account becomes dormant if it has been inactive or has no activity for several years. Typically, this activity must be owner-generated. Financial institutions use the customer's last transaction date as the determining factor. If a customer has multiple accounts, the most recent owner-generated activity on any account establishes all accounts are active. Owner-generated activity includes deposits, withdrawals, ATM use, debit card transactions, documented in-person branch visits, online banking activity, written correspondence, a response to a due diligence notice, and documented phone conversations. Internal transactions such as automatic dividends, auto-renewed CDs, service fee assessments, or account maintenance fees are not considered account activity. Financial products like certificates of deposit, individual retirement accounts, and safe deposit boxes have special unclaimed property reporting requirements. It's important to note that all three of these products are not reported to the state if the owner has other active accounts at your institution or if there is a record of communication with the account owner. Certificates of deposits, or CDs, have a 3-year abandonment period. It begins on the day following the first maturity of the certificates when the owner can recover the funds without penalties. If there is no contact with the owner for 3 years from the day following the first maturity, then those certificates are considered dormant and should be reported as unclaimed property to the state. Automatically renewable CDs have the same reporting criteria as other certificates of deposit. If owners of CDs have other active accounts with your institution, or if you have other contact with the owner, do not report or remit their certificates of deposit. Traditional individual retirement accounts, or IRAs, also have a 3-year abandonment period. When there is no contact with the owner, dormancy begins on the required minimum distribution date or the date of the owner's death. Again, IRAs are not reported as unclaimed property if their owners have other active accounts at your institution or if you have record of communication with the owner. Holders in the state of Texas are statutorily required to preserve dormant accounts. Be sure that your system stops assessing service charges once an account has been inactive for over a year. The presumption of abandonment is essential for timely reporting. Accounts that are presumed abandoned are subject to unclaimed property reporting to the state. An account is considered abandoned when 1. The account or safe deposit box has been inactive for the appropriate time period, and 2. The bank has had no contact with the owner. Accurate account coding is also necessary to determine the presumption of abandonment correctly. An incorrect status or property type can trigger reporting too soon, too late, or not at all. Reporting a property too early may upset a customer, employee, or investor. On the other hand, reporting unclaimed property too late may result in penalties and/or interest assessments by the state. Unclaimed property reported by financial institutions is not limited to customer accounts. Any dormant property resulting from the bank's regular business operation or internal processes should also be reported to the state. Credit balances, overpayments, and unclashed employee payroll or vendor checks are examples of regular business operation property. Unclaimed property may be overlooked during corporate mergers or acquisitions. A financial institution is likely responsible for the accounts acquired in a merger. Safe deposit box accounts have a 5-year abandonment period that begins when the last rental payment was due and went unpaid. But remember, if the owners have other active accounts at your institution, or there is a recorded communication with the owner, do not report their property. All reports and payments are due on July 1st of every year. When submitting unclaimed property reports, you must file a separate report for safe deposit box contents separate from your report for all other property types. Safe deposit box contents are not due at the same time as the report, so filing the report and submitting the contents of a safe deposit box happen separately. The report is filed electronically and must be filed on or before July 1st. It must include all available information on the owner, an inventory of the contents, the total face value of all cash in the box, and the box number. Safe deposit box contents are unique and will be evaluated by subject matter experts on the Texas Unclaimed Property team. You should never send checks in lieu of cash and never run coins through a counting machine. Report everything as you found it. After submitting the report, you will receive an email notification with a scheduled delivery date for box contents. When mailing the contents, use the address included in the letter that is emailed to you. Do not use the U.S. Postal Service for delivery. Send tracking information to unclaimed.auction@cpa.texas.gov. Remember, the more information you provide in your unclaimed property reports, the easier it is for us to reunite property with its rightful owner. Please include all available information for each owner, including their full name, social security number, last known address, and account numbers. Individuals listed as payable on death beneficiaries should be reported as owners with the correct relationship type code. Individuals listed as account representatives but who are not entitled to transact on the account should not be reported as account owners. If the unclaimed property owner's last known address is in a state other than Texas, you should report that property to the state of the owner's last known address. For money orders or cashier's checks where an owner's name is not known, please list their name as unknown and provide the check number and issue date. However, if the owner's name is known to the institution, that should be reported in their unclaimed property report. If you need additional instruction, there's a link in the description to our general business reporting instructional video, which provides more in-depth guidance on filing an unclaimed property report in Texas. If you still have questions about reporting unclaimed property to Texas, we encourage you to call us at 512-936-6246 and use option 2, or email us at up.holder@cpa.texas.gov. We are always happy to answer your questions. Thank you for watching.